What's going on, everybody? We're back with TradeUI, and in this video we're going to show you how you can use one technical indicator to give yourself a better trading edge. This is an awesome tool that we can utilize to figure out market deviation and how we can find the best times to buy and sell stocks out there in the market. So sit back, take some notes, and let's learn more about Bollinger Bands. So Bollinger Bands are an awesome tool that we can utilize in the market. It'll tell us how you can deviate price action on the buy and sell side and find that average point to learn how to take profit when it comes to buying or selling based on the overall trend of the market. So it's a very awesome tool that I'm so excited to show y'all. But before we get into it, don't forget to go ahead and like this video, share, and subscribe. It really helps us grow this channel and gives us great ideas for content to give to everybody to make themselves better traders. And also don't forget that we have a Discord that you can join. The link's in the description below. We can trade with the TradeUI team in real time to understand what we're getting in and why we get in on those trades. But now that we've gotten past all of that, let's understand exactly how Bollinger Bands work. So what it does is it actually tracks over a period of time what is the average deviation to the upside and downside of a stock. So say a stock has been trading with a $5 deviation over the past 20 days, it's going to show you a range of $5 that the stock has been trading in. The beautiful thing is this is a dynamic system to find support and resistance lines. They're not going to be drawn out flat on the chart. They're always going to be moving. That way you can understand how that support zone that you got in or use as a target or entry point is going to shift as the price of the stock shifts over time. So let's look at the chart and really see what we're talking about here. So I have PANW pulled up on my chart, and to get to Bollinger Bands on Thinkorswim, I'm going to go to Studies. When I go to Studies, I'm going to edit Studies, and I'm just going to type in Bollinger Bands right here. I'm going to click it, and it's going to go ahead and default the 20-day period. So I'm going to go ahead and apply that, click OK. And what we're going to see is three different lines. This is the year-to-date chart, so this is a little more deviated than you'll see on the shorter-term chart. But what you're going to see is a purple line on the bottom, which is the support zone, a middle line, which is the actual average point, and then you're going to see the resistance zone, which is the red line. Easy peasy, guys. If you want to trade dynamically, trade between Bollinger Bands. You can easily do this on the short term to really give yourself an awesome opportunity to make profits. But we're going to actually take it up a notch to one example, and we're going to combine support and resistance zones to show you how it works. But before we get into that, let's see just how it actually accurately predicts on the chart. So, easy peasy, you want to identify the overall market trend. This one's bullish, so we look for buying opportunities. And you can think of two things. If you want to be more aggressive, you could buy at the purple, sell at the red. But if you want to be more consistently good at getting smaller wins, buy the purple, target the blue. I know you're really cutting yourself short by half of what you could make on trades, but understand that you're statistically more likely to hit the blue mark than you are to hit this mark over here, okay? It's one of those things that it's just if you make shorter term profits on a longer term chart more times, you're going to give yourself a great opportunity to consistently see that account grow smallly. It keeps you from having huge losers, but it also helps you grow in the long run. So before we actually look at buying any point on here, let's identify the best points to buy on here. So let's draw out our drawing tools here. And we're going to find our support and resistance zone. So right now, for me, 260 is a great zone for PANW. All right, and we want to see if there's anything else in this chart that we could argue as a support zone. So I see one at 200. You could argue that was actually right here at this little channel. It's 230. We'll say right there, and just because we touched it right here, we're going to say that 230 mark, 230.50. And then we're also going to draw one right here at 320. Okay, so the good thing about this from a longer term time frame, we have identified three key levels that we can look at as longer targets for our stock. Now, we want to figure out where we're at when it comes to those levels. What I mean by that is right here at this level, we see, let's see, why is that line not dark? Let me make this line a little bit darker for us, just so it sticks out. All right, so this line right here, this is a good buy zone overall in the chart. We would target this first blue line. All right, same thing. This blue line right here, is a great time to buy this stock. The closer it gets to it, we'll be at buying, and then we'd be targeting this in the longer term frame. But besides just buying once and targeting here and making one big play, we could have had plenty of opportunities to trade it until it got to this level. Back here's a great example of what's going on. Remember, we had a level right here we identified, and we had a roof right here we identified. So any time that the purple line, the price came down the purple line, we could buy it, and we could actually buy this blue Bollinger Band line. We could target this blue Bollinger Band line. So we would buy at 234, take profit at 248. All right, so that's what, $6 a share. All right, he's like, oh, $6 a share, but if you held, you could have made another 12 bucks potentially. But the fact that we made 231 all the way up to 249, I'm sorry, I think that's $18 a share. But the fact we could have made $18 a share here is great. And you're thinking, oh, you could have targeted here. But see how it never even touched this line until, what is it? Let's see, 1, 2, 3, 4 months later until it finally touched that line. But let's see how many times it actually touched the blue line before then. One time, buy. One time could have bought here, and you probably would have took a loss if you stopped out right here. Then just see how it actually came back up to this blue line. Next, you could have bought right here and then target the blue line. So it touched it twice to where you could have 2 really good high probability chances of winning this trade. You would have won 2, and then the one loss, you only would have lost a couple of bucks because you would have made more money buying and targeting this as long as you ran a tight stop right here because we're super close to this support zone right here. So you could have bought right here because you're back very close to that range or at the bottom part of the purple. Overall is bullish. And then you could have bought at 227, targeted 239, could have made an easy 12 bucks right there. All right, as you see, it ran up again. And then now you want to see, all right, when's the next time I can buy in on it? Well, right here, it got really close to that purple zone at 233.35. And you see it right there, it went to 247, 12 bucks right there. So that was 1, 2, 3, 4 opportunities you would have gotten on the chart. You would have lost 1, you would have won 3, and you would have made 30, an average 12 bucks, 15 bucks. You would have made, I think, 36 bucks when the entire time, if you would have first bought right here, you would have made, let's see, 31 all the way up to 60. You actually only would have made 30 bucks. So it's $5 difference, but it keeps you active in the market, and it doesn't keep you married to one trade over a longer period of time. You slowly going to see how you'd make 36 bucks by doing this versus making 30 bucks one time. You could say, oh, well, I could just buy it then, just not worry about it till it goes there. Well, the thing is, you would have been stopped out right here, and you would have never got back in on this opportunity unless you utilize the Bollinger Band strategy. That's something else you got to look at here, guys. It's not just I'm getting in more often, is I'm knowing to get out until the market shifted to my favor. And then now you're going to be like, well, where's the next floor? So the next floor looks like it's going to be this blue line, of course, we established as a past floor. You could argue there is a little bit of activity right here for a trade, and there was because it bombed this purple line and ran up here. But we want to see for another buying opportunity, which looks like it happened right here when we pulled back hard. Looks like post earnings, we pulled back to 260. And then if you would have targeted the blue line, 2 things you see here. One is the actual line that you drew as a former resistance line. That's now our new target again because it broke below the purple line. So you'd buy at the purple line, and you see how this line here is lower than the blue line at that period of time. So you would target which one's lower. In this case, you would get out at 321. And then you can see that we never really touched that blue line until we got back here when it touched down to 292. That's the importance of understanding if you have a wide range on your Bollinger Bands. So basically there's a big move. Don't just rely on the blue line here, okay? Rely on the support and resistance lines. Bollinger Bands are great when it's trading tight, but remember, after it trades tight for a little while, it's going to be due a breakout to the upside or downside, and you need to have a different strategy for those particular plays. So this situation right here, I wouldn't be looking for any buying opportunities until it came back down to like 264, unless we establish that this might be a new support zone at 290. This is a trade that if you're in at 266, 264, and you got in and sold out here, that was a great profit. Me personally, I wouldn't be touching this until it actually came back and touched this purple line here again. But let's see what else we can utilize this indicator for. Let me go to Apple. All right, easy one that everybody loves. So I already have some lines drawn up here on Apple from a previous study I was doing, but we can actually utilize this to see how Bollinger Bands are just as active. So Bollinger Bands on Apple right now, overall is trading sideways, so you could use it either way for buying or selling. Me personally, I always like to buy versus selling just because I feel a little safer doing that. Okay, so Apple had a strong line right here. All right, so back in the past, you see where we got down to this purple area. If you would have bought right here, targeted the blue line, or remember, actually target our resistance line, which is 174, you could have made a quick, easy profit there. Again, you could have done it here, and again, you could have done it here. Good rule of thumb is when you don't really have a bottom line drawn out, and in this case, there actually is at 167, you want to make sure that if you're targeting $2, you have a stop loss at $1. That way, you're running a high probability successful trade, and it keeps you in the game longer when it comes to running these types of trades. Because if your win rate is higher and you're making more money than you lose, you will stay in the game longer and make money. But right here's a great example where the purple line is lining up with a support zone that we have right here at 180. As you can see, the price broke below the purple line, and then as soon as it broke back through, we looked for a buy opportunity right here, and then you could have held. It got a little retest right here, but it actually ended up coming back to touch that blue line, and vice versa. You could have done it right here and immediately get back on the blue line. So you would have had an awesome stock move twice in only less than a month on Apple by buying right here with the purple line, where the price breaks you the purple line, and targeting the blue line for your take profit. And again, see how you want to make sure you're going soft on these plays and you're running tight stops when it comes to being around actual support zones, because if you would have bought here, you actually would end up getting stopped out as soon as it broke down right here, thinking, oh man, the price is looking good, I'm fine. But the fact that our Bollinger Band, our blue line right here, is starting to break below this support zone, that tells me that that trade's broken, get out, because it's going to be a big move to the downside or upside once that happens. But now what you can do is you can take it to the next level. You can wait for price to break below, which happens right here. Price breaks below. Now looking at buying opportunities to target the blue line, which is right here, because we are below our target zone, which really you should be targeting this line here, this 174 level, because remember, if the support zone is below the blue line, that's your new target, not the blue line. It did in this case go up to the blue line, but a lot of times you may not see that happen. Right here's another great example of where we're below our zone. We're actually at a buy zone right here. We could have bought and then targeted the blue line here right before earnings. I'm really curious what's going to happen with Apple at earnings. I'm actually very bullish on the stock. But let's look at another favorite. Let's look at Meta. This is the last one for this video here. So Meta, this is a great example of how to trade a tight one here, because it's all a straight up trend. And now it's trying to figure out, hey, when's the best time to actually buy in on a trend that's kind of not going straight one direction, but really overall it's going up. Well, any time that you have an upward trend in this kind of pattern, as soon as it deviates to this purple line, that's a buy zone. Target the blue, get out. All right, so here, could have bought some more right here. Target the blue, got out. All right, buy here, target here, really tight right here. Buy here, tight here. And you're thinking, well, that Bollinger Band is so tight. Is it even worth doing it? Sometimes it is, guys, because when you have a tight channel trading like that, you can either buy once and sell at the end of the year, or you can just buy and sell, and keep getting those quick singles that will make that account grow. Because catching the short moves to the upside every time will make sure that you catch the overall move. And that's what you want to look at when it comes to long-term trading. Right now, Meta is really iffy. You could see a deviation back to the blue line a little bit, but that's a different story depending on what we have in support resistance. Honestly, I wouldn't touch it until I got to 400. One more stock I'll do for us. Let's do, I'm trying to think of one that might be ABT. I just typed in ABT. Wow, that's funny how this lines up here. Okay, so ABT overall looks bullish recently. Looks like we're at a support zone with a Bollinger Band touch here. So it looks like a great entry was this 105 level. You could easily target that 109, made $4 a share, almost 3% in just a couple of days, guys. And that's how easy it is to trade with Bollinger Bands. You could have done the same thing right here. Bought the purple, target the blue. All right, buy at the purple, target the blue. Buy at the purple, target the blue. Easy peasy, guys. It's rinse and repeat. It's not rocket science. But if you enjoyed this video, don't forget that we have other videos in this YouTube channel, and you can utilize those videos to make yourself a better trader. Guys, we enjoy teaching you how to do trading with Bollinger Bands, and we hope to see y'all later in future videos. See you later.